Welcome, my dear students. Today, discuss the introduction to the management accounting. Okay, number of students are not attending the class. So please attend this class. This is a compulsory to all students. My dear students. Okay, now discuss the introduction of the management accounting. First, you have to study what are the needs, what are the purposes, what are the objectives to study the management accounting. Okay, now what are the purposes? What are the objectives? What are the needs to study the management accounting? We discuss the one by one the purposes or objectives of the management accounting. First one, comparison. Means when you want to compare one from one firm to another firm, when you want to compare the profitability of a company to another company, when you want to compare the from year's profit to another year, means you can compare the from 2020 to 2022, whatever it may be. Means when you want to compare from one organization to another organization, from one industry to another industry, whatever it may be, means when you want to compare from organization to organization or year to year or cash balance or ratio. Okay, there are different comparisons. Okay, that's why it is necessary to study the management accounting for comparison. The second one, the investment decision. Okay, when you want to invest our money into the particular company, before making a decision in a particular company, means first you have to see that what is the profitability of that company, what is the turnover of that company, what is the sales turnover of that company, okay, what are the main features, okay, what will be the profit after investing our money into the particular company. Before making the investment in a particular company, we can take the investment decision. If you have made the investment in particular company, okay, whether it is a profitability or loss, before making the investment decision, before making the investment in a particular company, we can take the decision properly. Take another one example. Okay, now I want to purchase the JCB. Okay, there are different types of a company. The Tata JCB, next one, what is that, Hitachi. There are different JCB in a market. Okay, when you want to purchase that particular JCB, you can compare what is the profitability from one machine, one JCB to another JCB after certain period. After 10 years, what will be the return on investment in a JCB machine? You can take the decision by studying the management accounting. Okay, that's why it is necessary to study the management accounting. Take another one example. When you want to invest our money into the particular asset, A asset or B asset or C asset. Okay, there are three assets, A asset, B asset and C asset. Okay, these three assets having the same future. But the problem is which asset is to be purchased, A asset or B asset or C asset. Okay, there are different assets. From which asset we can earn more profit? That is a question to the company. That is answerable to the company. Mean, in which asset you have to invest? In which asset we can invest our money? Means by calculating the different techniques in management accounting. Only it is possible in the management accounting. Next one, select suitable financial resources. Generally, you know that there are different financial resources. You can raise the capital by issuing the equity shares. You can raise the capital. You can collect the capital by issuing the preference shares. You can collect the amount by taking the loan from the bank. Next one, you can collect the amount by utilizing your profit. Okay, there are different sources to collect the capital by issuing the equity shares, by issuing the preference shares, by issuing the debentures, by taking the loan from the bank. What is the question? From which sources the amount is collected? From which sources the amount means the investment, the profitability is more. Okay, if we collect the fund by issuing the equity shares, if the profit is more, then you have to collect the amount from by issuing the equity shares. If the profit is more, by collecting the amount by issuing the preference share. If the profit is more, by taking the loan from the bank. Means from which sources you can collect the capital, that is the question. That's why selecting the suitable financial resources, the management accounting tells how to select the financial resources. Okay, this is also third objective. Next one, required information. Already I told you, there is no particular format, there is no particular decision, there is no particular objective why the management accounting subject is studied at. Why you are studying the management accounting, there is no particular rule, there is no particular principle, there is no particular objective. Means what the management is expected as per the requirement of the management, you can prepare the financial information. If the sales manager wants the sales performance, the sales report can be prepared. If the chief accountant wants information about the profitability of the company, the profitability of the statement can be prepared. If the board of directors wants what is the profitability on investment in a particular asset, we can prepare the return on investment report. Means as per the requirement, we can prepare anything. Okay, means what the management is required the information, as per the requirement of management, we can prepare the statement. In management accounting is only possible. Next one, planning. Planning is very important. Before making any financial decision, the planning is very important. Means at what time, for which purpose, why the amount is invested. Means by giving the answer to all questions. Why, when, where, means when, why, how. Okay, for these questions you can give the question. Means we can prepare the financial plan. Okay, only it is possible in management accounting. Next one, selecting appropriate funds. Okay, from which sources of fund we can collect, we can select the fund. Okay, means by issuing the preference shares, by issuing the equity shares. Next one, by taking the loan from the bank. That is important. That's why for selecting appropriate funds, the management accounting subject is an essential. That's why these are needs, these are objectives, these are necessary to study the management accounting. Means comparison, investment decision, selecting suitable financial resources, required information, planning, selecting appropriate funds. Okay, these are all needs to study the management accounting. Okay, now come to the what mean by management accounting. Meaning of management accounting. Okay, what I mean by the management accounting? the preparation and presentation of accounting information which makes the help management to take decision is called management accounting. What I mean by the management accounting? The preparation and presentation of accounting information which makes the help the management to take decisions is called management accounting. The preparation and presentation of accounting information which makes the help the management to take decisions is called management accounting. Okay, now study the what are the features of management accounting. What are the features of management accounting? One by one we study the management accounting. First one, guiding management. The management accounting subject guides the management. How to maintain the funds, how to get the more profit on investment, when the amount will be recovered, when the investment amount will be recovered from such investment. Okay, that will help the management to guide in all situations. Where to invest, when to invest, how to invest. Okay, for all these questions, it guides the management. The management accounting gives the answer all the questions of the management. Next one, ultimate results to the users. Means what the users are required the information, all informations are provided to the management. Means what users are required, what the users are required the information, all information is provided to the users. If the users of the accounting information wants the what is the profitability of the company, okay, that information is provided. If the creditors of the company, okay, that information will be provided to the creditors. What is the credit worthiness of the company? What is the rate of return on investment? If the equity shareholders wants to know about what is their profitability of the company, that information will be provided to the equity shareholders. And what is the asset turnover ratio? Okay, that information will be provided to the board of directors. What is the dividend rate? Okay, that information will be provided to the equity shareholders. Mean the ultimate result to the users. The final result can be given to the users only in a management accounting. Next one, in the form of analysis. Okay, already I told you the management accounting gives the information in the form of analysis. Analysis means comparison. We can compare from A company to B company or B company to C company, from 1 year to another year, from one asset to another asset. Means we can compare. When comparison is possible, when comparison made, we can take the decision which asset is better, which result is better, in which year the profit is more. That's why all information will be made in the form of a financial analysis. Next one, using financial techniques. There are different financial techniques. Means ratio. Next one, budgetary control techniques, cash flow statement, fund flow statement. Okay, all these financial techniques are used in management accounting subject. Next one, no rules, no principle. This is the main feature of the management accounting. What is that? There is no rule, no principle. You can there are different information. We can use any information. There is no particular rule, but in financial accounting there are different rules. Providing the depreciation is a different rule. Debiting and crediting, there are different accounting rules, but there is no particular rules and principles in management accounting. Next one, required information. Required information means the management gets the information for which purpose the information is available. That information can be prepared. Okay, the sales turnover ratio information, budgetary control information, cash flow statement information, fund flow information, whatever it may be. Means as per the requirement of management, the information can be prepared. Okay, these are all features of management accounting. First one, what are the features of management accounting? Guiding management, ultimate results to the users in the form of analysis, using financial techniques, no rules, no principles, required information. Okay, these are all features of management accounting. Now discuss what are the differences between management accounting and financial accounting. What are the differences between management accounting and financial accounting subject? Okay, now discuss the differences between management accounting and financial accounting. Difference 1, meaning. What mean by the management accounting and what mean by the financial accounting? First one, management accounting. What mean by the management accounting? And what mean by the financial accounting? Okay, now discuss what mean by management accounting. Management accounting is first, in examination time, he asks the question, what are the differences between any matter? First, you have to write the meaning of both. Means you have to write the meaning of management accounting and financial accounting. Okay, now, what do you mean by the management accounting? The preparation and presentation of accounting information which makes help to the management to take the decision is called management accounting. Okay, what do you mean by the management accounting? The preparation and presentation of accounting information which makes the help management to take decisions is called management accounting. Okay, now come to the financial accounting. What is the meaning of financial accounting? Recording, classifying, summarizing, presenting and decision making of financial information. What mean by the financial accounting? Recording, classifying, summarizing, presenting and decision making of financial information. Okay, this is a financial accounting. Recording means writing down all the financial transaction in the form of electronic devices, means by using the Tally software or any other software, or you can write the transaction in one set of books by using the pen, by using the papers, whatever it may be. Classifying means the assets are separated, expenses are separated, liabilities are separated, incomes are separated. Recording, classifying, and the next one summarizing. Summarizing means getting the result, means adding all income, adding all expenses, deducting expenses out of a total income, then you'll get a profit or loss, that is summarizing. Presenting means Preparation of financial information in a systematic way means all assets and liabilities are shown in balance sheet. All income and expenses are shown in a trading account and profit and loss account. This is the presentation. Means this is a systematic manner. Next one, decision making. Decision making means after preparing all financial statement, we can take the decision whether the business can be expanded or whether the business can be sold or whether the business in loss. We can come to the result. We can come to the decision. Okay, this is the first difference between management accounting and financial accounting. You now see the second differences between the management accounting and financial accounting. Difference to objective. What is the objective of management accounting and what is the objective of financial accounting? Management accounting, what is the objective and what is the objective of financial accounting? Providing information to the management, this is the objective. Providing means determining the accountability, means all financial transactions are to be recorded with true and fair. That is accountability. Okay, this is the objective. What is the objective of financial accounting? Determining accountability, means all financial transactions are to be recorded. Okay, this is the second difference. Next one, third difference between management accounting and financial accounting. Third difference, scope. What is the scope of management accounting and what is the scope of financial accounting? Management accounting and financial accounting. Okay, what is the scope of management accounting? Wider scope. The management accounting has wider scope. We can study the management accounting in a different ways. Okay, all means the number of information, the number of matters, the number of matters will be discussed in the management accounting. That's why the management accounting has a wider scope. In financial accounting, the has a narrow scope. The financial accounting has a narrow scope. The differences between management accounting and financial accounting. Third, next one, fourth differences. Planning. What is the planning of management accounting and what is the planning of financial accounting? The management accounting has long-term planning. The financial accounting is only short-term planning, because the management accounting can be prepared for more than 1 year or 2 years or 3 years or 10 years. Or there is no limit. There is no time limit to prepare the financial information. There is no time limit to prepare the management accounting information in a management accounting. But in a financial accounting, there is a time limit to prepare the accounts, because at the end of the every year, how to close all accounts. Means generally how to prepare the financial statement, trading account, profit and loss account and balance sheet are prepared at the end of the year. Means within year all accounts are to be closed. Means the financial accounting is a short-term planning and management accounting is a long-term planning. Next one, what are the differences between management accounting and financial accounting? Management accounting and financial accounting. In management accounting, the management account does not follow any principle. It is not necessary to follow the principles in management accounting, because already I told you there is no particular rule, there is no particular principle to follow the management accounting. But in financial accounting, it needs to follow principle because means when you want to debit and credit, how to follow the what are the personal account rule, real account rule, and nominal account rule, and also how to follow the rule principles in the preparation of a trading account and profit and loss account. Generally, in the preparation of a trading account, you have to follow the means you have to take only the direct income and direct expenditure in a trading account, indirect income and indirect expenditure in a profit and loss account. In the preparation of balance sheet, only you have to take the real account and the nominal account. Okay, these are the there are number of principles in the financial accounting. Next one is the differences between management accounting and financial accounting. Sixth difference, the type of data. Management accounting and financial accounting. In management accounting, you can use qualitative, quantitative, and numerical information. You can the different type of data, qualitative, quantitative, and numerical information. But in financial accounting, you use only money measured numerical information. Means generally, in the case of asset side, when you want to prepare the balance sheet, generally you have to take all assets in numerical value, not in quantity. 2 furnitures, 2 chairs, 3 chairs, or 3 pens are not written in financial accounting. Means the value of asset is measured in the form of money. Means you have to write the assets or you have to write the liabilities in the form of money. Okay, that's why the financial accounting information uses only the numerical information. But in case of management accounting, there are different data are used in management accounting. It uses the qualitative, quantitative, and numerical information. Okay, these are all the differences between the management accounting and the financial accounting. Okay, if you have any doubt, you may ask any question by making the message to my WhatsApp group or in a live chat. You can ask any question. Okay, thanks for watching this video.